You've been sold a lie. The lie is that to get rich with crypto, you have to be a full-time trader, glued to a screen 12 hours a day, mainlining coffee and stress. That's a fantasy cooked up by exchanges and so-called gurus who want you to trade constantly. Why? Because they get rich off your fees while you slowly trade your account down to zero. I've been in the crypto game since 2017, and I learned the hard way that trading more does not mean making more. For most of us, it just leads to anxiety, burnout, and a whole lot of losses. So in this video, I'm going to show you the smart way, the balanced method that lets your money do the work so you don't have to. This is the exact strategy I use to build a life-changing portfolio, and it's designed for normal people who want to live life, not just stare at charts. So what is this smart way? First, let's be clear about what it's not. It's not day trading. It's not trying to perfectly time the top or bottom of the market, which, trust me, is a fool's game. And it is definitely not blindly tossing your money at some random meme coin because a guy on Twitter said it is going to the moon. That's not investing. That's just gambling in the digital Wild West. The smart way is a simple game plan built on two powerful ideas. Think of it like building a house. Pillar 1 is your foundation. This is the solid concrete base of your crypto wealth. We build it with proven, reliable assets and strategies that grow steadily over time, with almost no effort. This part is designed for safety, stability, and long-term growth. Honestly, it's the boring part. And boring is where the real money is made. Pillar 2 is your accelerator. This is where we add that high-growth sizzle that crypto is famous for. Once your foundation is secure, you can take a small, calculated slice of your portfolio and make some strategic plays for higher rewards. This isn't reckless gambling. It's about making smart, opportunistic moves to speed up your gains. It is like decorating the house. You only do it after the foundation is set and the walls are up. This balanced approach gives you the best of both worlds. The steady, reliable growth of a long-term investor and the explosive potential of crypto, all while taking emotion out of the driver's seat and giving you your time back. All right, let's get to the good stuff. Step 1 is building that rock-solid foundation. This should be the bulk of your portfolio. I am talking about 80%. And it has two simple ingredients: long-term holds and staking. First up, long-term holds, or as the crypto world loves to call it, hodling. The strategy couldn't be simpler. You buy cryptocurrencies with real, proven value, and you hold them for the long haul, months or even years. The whole point is to ignore the crazy day-to-day price swings and just ride the market's overall upward trend over time. But what do you buy? For your foundation, you stick to the blue-chip champs of crypto, Bitcoin and Ethereum. These aren't just coins. They're the bedrock of the entire industry, with massive networks, constant development, and a long track record of being resilient. So how do you buy them without stressing about when to buy? Easy. You use a technique called dollar cost averaging, or DCA. This just means you invest a fixed amount of money on a regular schedule. For example, you buy $100 worth every Friday, no matter what the price is. This automatically averages out your purchase price over time, so you never have to worry about that nightmare scenario of investing all your money right at the peak of the market. It's a disciplined, set-it-and-forget-it strategy. Now let's add a passive income engine to your foundation. Staking. Think of staking as hodling, but you get a paycheck for it. When you stake your crypto, you're helping to secure and run a blockchain network by locking up your coins. The network then pays you rewards for your help, kind of like earning interest in a savings account. Major cryptocurrencies like Ethereum run on a proof-of-stake system, which is what makes this all possible. You can easily stake your assets on trusted exchanges like Coinbase and Kraken, or through specialized platforms like Lido. The rewards, or APY, can be pretty sweet. For a major player like Ethereum, you're typically looking at something in the 3% to 5% range these days. It's like getting paid to hold an asset you already believe in. You can also find even higher rewards for other coins like Polkadot or Cardano. So, your foundation is simple. DCA into Bitcoin and Ethereum, then stake your ETH to earn passive income on top of its growth. That's 80% of your portfolio now on autopilot, quietly building your wealth. Okay, your foundation is set and growing. Now for the fun part, the accelerator. This is where we deploy that last 20% of your portfolio into higher risk, higher reward strategies. And let me be clear, this is not day trading. We are not staring at charts. We're making smart, calculated moves to tap into the incredible returns that only happen in crypto. Our main tool for this? Yield farming. Yield farming is a way to earn rewards by putting your crypto to work in decentralized finance, or DeFi. Basically, you get to act like a mini bank. You deposit your crypto into something called a liquidity pool on a decentralized exchange like Uniswap. These pools are what let other people trade different coins. For providing that service, for providing liquidity, you earn a cut of the trading fees, usually paid out in more crypto tokens. And the returns can be wild. While staking might earn you a solid 5%, it's not rare to see yield farms offering anywhere from 10% to over 100% APY. So what's the catch? The risk is higher. You have to watch out for something called impermanent loss, which basically means you could miss out on some gains if the prices of the two tokens you're providing move in opposite directions. And there's always smart contract risk, the risk of a bug in the code. That's exactly why we only use our 20% accelerator fund for this, and we do it smartly. A great place for beginners to start is by farming with stable coins, like USDC or USDT. Because they're pegged to the dollar, this move dramatically reduces your risk of impermanent loss. It is not completely gone. There's always a small chance a stablecoin could lose its peg, but it's the safest entry point and can still pull in a reliable 5 to 15% return. Once you get comfortable, you can explore pairs like Ethereum and a stablecoin. Platforms like Aave, Uniswap, and Curve Finance are some of the most battle-tested places to start. This is what a smart trade is in our system, a strategic move into a high-yield protocol that generates income for you automatically. So you've got the pillars. You understand the foundation and the accelerator. The last step is putting it all together into a system that pretty much runs itself. This is how you go from being a nervous speculator to a savvy investor. The whole system is guided by one simple rule, the 80-20 split. 80% of your money is in your foundation, long-term Bitcoin and staked Ethereum. That's your wealth-building engine. It's slow, steady, and dependable. The other 20% is in your accelerator. This is your play money, but you're playing to win. You use it to explore well-researched DeFi opportunities like yield farming and let them generate that high-octane income. But the most important part of this system is managing your risk. Rule number 1, never ever invest more than you're willing to lose, especially with that 20% accelerator fund. Rule number 2, you have to learn to take profits. When one of your yield farms or other plays does really well, you rebalance. Skim some of those profits off the top and move them back into your foundation. Buy more Bitcoin, buy more ETH. This locks in your gains and makes your safe, stable base even stronger. This system is designed to take your emotions out of the equation. By sticking to your plan, you won panic sell during a 10% dip because you know you're in it for the long term. You won't get tempted to ape into a risky new coin because your system tells you exactly where your money should go. This is how you make your money truly work for you. The foundation gives you security, while the accelerator hunts for those exciting gains, all without you having to be chained to a desk. So there you have it. The lie is that you need to be a trader. The truth is, you need to be an investor with a system. Let's recap the game plan. Build your wealth on a strong foundation. That is 80% of your portfolio in Bitcoin and staked Ethereum, bought using dollar-cost averaging. Then use the other 20% as your accelerator, strategically chasing higher yields in DeFi to supercharge your returns. This balanced method is your ticket to building wealth in crypto without sacrificing your time or your sanity. It puts your portfolio on autopilot 24/7 so you can get back to living your life. This is how the smart money wins. If you got value from this, do me a huge favor and hit that subscribe button. And if you're ready to get your hands dirty and want a deeper look at finding those high-yield accelerator opportunities, click the video on the screen right now. Let's start building the smart way.